Stock's not the only thing under a whole lot of pressure. Oil, obviously, in fact, started this whole thing. Bonds, bonds, there's been some movement to bonds, but I really didn't think the 10-year yield moved to the degree that I would have thought. Of course, commodities were the things, including oil, copper at over 6-year low. And then there was gold, which this week, was a disaster. How do we put it all in place? Well, let's figure it out. Back with us, we've got Veronica, Dominick, and Jim Layfield. Jim Layfield, who put that in the prompter? John Layfield, who put that in the prompter? And I'm like, Anchorman, I read it, too.
That's right. Thank you, San Diego.
All right. Help us out here because, you know what, the bond rally, Veronica, has been amazing. It's gone on year after year after year. And every time we hear, okay, it's going to end, it's time to get out of bonds and go somewhere else, it turns out maybe it's a safe haven. We should stay there.
Right. If you look at the 10-year today, a lot of people flocking there. A lot of people looking the 10-year. A lot of people starting to look at gold again, which is interesting. That's finally come out of bed. We haven't seen that sort of action in a while. I think people are looking for safe havens. I think when you're looking for these safe havens, though, proceed with caution as you would with stocks. You got to make sure they're right for you and your portfolio.
Well, how would I know? I mean, if I'm in the stock market, no one has 100% of their money in any one asset class.
Good.
Do we use that scale thing with the age? Okay, the older I get, the less I have stocks and more in bonds kind of thing? I
think you have to determine what your risk tolerance is for your own situation. If you've got kids in college or you're under saved for retirement, you might need to get a little bit more aggressive if you haven't saved enough for retirement. If you have more liquidity needs, you got to pay the tuition bills, maybe you have a little bit it depends.
So it's a case-by-case basis.
It's case-by-case situation.
Dominick, what do you make of the action? Okay, gold got a bid this week, started to rally here a little bit. I thought oil was interesting today. I thought it was interesting today. It felt like it made something of a stand. I know maybe it's a Pyrrhic victory, but it made something of a stand. What do you make of what we're seeing there?
Well, gold is definitely the fear trade, right? People are getting out of stocks. They don't want to buy bonds. They're afraid of what the Fed's going to do.
Last October when we started to come down real sharply, gold didn't make that same kind of bounce. I guess it wasn't this cheap, though. It
wasn't as cheap, and we didn't have this kind of drop in the markets last fall. So people are searching right now, and they're reluctant to buy bonds, but there are asset classes that are still up year to date in our portfolio. So we're looking at those asset classes.
What asset classes?
Real estate is still up year to date.
I mean, crack? What else you got?
Our bond portfolio is doing great, as a matter of fact. Munis are still doing great year to date. So we have asset classes in the portfolio that are up year to date. And we're actually looking at a time when can we rotate the things that are still profitable into things that have really gotten beat up. So that's the trade we're looking at.
Is that getting too cute, though, for the average person to try that thing?
Well, I don't know if they can do it on their own. That's what we get paid to do,
sell your winner and buy a loser goes against the grain of what people are told.
Isn't that the whole game, right? Aren't we supposed to sell high to buy low? So when we're looking at what was going on, and we talked about biotech, I think about 10 days ago, stay the hell away from biotech, right? But it's gotten beat up really bad. At some point, you got to believe it starts to have some value, and you want to come back into it.
John/Jim, how do we knit this all together?
Well, I tell you, that gold trade is very interesting because gold mining stocks were down about 90%. They've up about a 20% bump off that low. But look, the way you knit it together is it's a stock picker's market, but it's always a stock picker's market. I think the market in general is going to go down. I think there's a disconnect. I don't think you can say that the economy is firing on all cylinders, full steam ahead, like the stock market was. So I think you have to decouple the stock market from the economy.
Yeah, I did recommend one gold stock to my subscribers this week. We're up a little bit, so we'll see. It was mostly just on a hunch more than anything else. I mean, it seems oversold to me. All right, guys.